step into the ultimate corporate showdown. Pepsico, Coca-Cola, and are battling for the crown in the food and beverage world. But this fight isn't just about snacks and sodas, it's about financial power, global influence, and how reinvesting dividends today could unlock massive wealth tomorrow. In the corporate arena, a food fight isn't about throwing sandwiches, it's about intense rivalry. These three giants are constantly competing for dominance, shaping consumer habits and influencing economies worldwide. A key element of their strategies lies in dividends, which not only reward loyal investors, but also reflect a company's financial health and long-term vision. PepsiCo, Coca-Cola, and spend billions on marketing, research, and innovation to stay relevant. But consumer preferences are shifting toward healthier, more sustainable options, and that means they must adapt quickly. For shareholders, dividends provide stability, reliable income stream even during market turbulence, making them an essential piece of the growth puzzle. This battle is about far more than who sells the most beverages or snacks. It's about anticipating trends, making smart financial moves, and reinvesting for long-term growth. Dividends that are reinvested can supercharge wealth over time, but it's a balancing act. Invest too little in innovation, and progress slows. Invest too much, and profitability takes a hit. Rising costs, supply chain disruptions, and global uncertainty are challenges all three companies face. Yet they continue to adapt, expand into new markets, and diversify product lines. Their ability to innovate while maintaining dividend payouts is what separates leaders from laggards. PepsiCo's strength lies in its diverse portfolio, stretching from salty snacks to popular beverages. Coca-Cola thrives on global brand recognition and its iconic product lineup. The Swiss powerhouse commands a wide range of food and drink categories, from coffee to bottled water. But the real question remains, who leads in revenue, innovation, and investor rewards? Recent performance shows PepsiCo enjoying strong growth in emerging markets. Coca-Cola has leaned into restructuring and digital innovation, has emphasized sustainability and health-focused products. Each path has strengths, but not all of them will deliver equally strong shareholder returns in the long run. One surprising trend reveals that a single company has surged ahead by mastering dividend reinvestment. This strategic move has allowed it to fuel innovation, expand in high-growth markets, and maintain steady payouts to investors. By balancing reinvestment with dividends, this company has managed to outpace its rivals. Its commitment to digital transformation and emerging markets has created a solid foundation for continued growth. Investors who have reinvested dividends here are seeing compounding benefits that give them an edge over competitors. This isn't just good management, it's smart financial discipline. Stable and growing dividend yield is a powerful indicator of confidence in the future. It shows that a company not only values innovation but also prioritizes rewarding investors consistently. For shareholders, it's a clear signal of trust and long-term commitment. The food fight between PepsiCo, Coca-Cola, is far from over. Their ability to adapt, innovate, and balance financial rewards with growth strategies will determine the true winner in this corporate battle. Dividends will remain central to the story, shaping both investor sentiment and company performance. In the end, it's the winner just be the company with the biggest brand will be the one that masters innovation, meets changing consumer demands, and uses dividends as a powerful tool for growth. So who will ultimately rise to the top? PepsiCo, Coca-Cola, or beyond products and profits? These companies are also under pressure from governments and activists to embrace sustainability. From reducing plastic waste to lowering carbon emissions, the future of their reputation will depend heavily on their environmental commitments. Investors, too, are watching closely, since ESG environmental, social, governance standards increasingly influence stock performance. The digital revolution is another battleground. From AI-powered supply chains to e-commerce partnerships, PepsiCo, Coca-Cola, are racing to modernize operations. Those who can harness data analytics to predict consumer behavior will likely gain a massive edge over the competition. Global expansion continues to play a huge role in shaping the scoreboard. With populations in Asia and Africa growing rapidly, these regions offer billions of potential new customers. Companies that invest smartly in these markets stand to dominate the next generation of consumer demand. But let's not forget about the role of branding and emotional connection. Coca-Cola has built a culture around happiness, while Pepsico ties itself to youth and lifestyle and often emphasizes trust and family. In many cases, these emotional connections are just as powerful as financial decisions in driving long-term success. Ultimately, the battle between Pepsico, Coca-Cola, and is not only about who wins. Today it's about who is best prepared for tomorrow. Adaptability, sustainability, and consistent financial strategies will decide which of these titans remains at the top for decades to come. Thanks for tuning in. Share your thoughts in the comments. Who do you think will win this epic showdown? And don't forget to check out my other videos for more insights into the fast-paced world of business, investing, and finance.